So what if rates stay higher longer? Honestly, what does that mean for all of us here in real estate, right? I mean, because it's getting to a point where it's like not higher for longer. It's more like we have a Fed that is changing all the time. And since we haven't got a cut, the bond market, the treasury market, the whole market, it reacts because they're waiting for the Feds to cut. And if they just cut 1/4 point, they know, the Feds know that changes the psyche of investors. It changes the psyche of real estate investors. It's Wall Street, like politicians, business owners, consumers, everybody, because they know we're pivoted and we're moving in a direction of lower rates, cost of capital is less, and we're going down the mountain, right? We're climbing up the mountain with higher rates, and we come back down. So what does that all mean? How's it gonna last? How does this shake out, right? So it's really, really frustrating because you're sitting here, you're trying to predict things, you're trying to make things happen, and you listen to them and they change their perspective. So it's very frustrating. So any of you guys in real estate listening to this, I feel your pain. I get it. It sucks. It's not fun that a group of individuals, whether we agree with or not agree with, whether they're right or they're wrong, and typically we know they're wrong, they carry a lot of weight. They can make or break the market right now. They can make or break the stock market. You know, they're just holding this out. And a lot of people do not agree with their stance. They think they should have already cut. They should cut because here's the unknown. We don't know if something's going to pivot or change. We don't know if something is going to give. We don't know if something's going to break. We don't know that a recession's around the corner. We don't know if there's going to be mass job layoffs. We don't know all of this stuff. Things could unravel quickly, which they have in previous markets, cycle times, and previous history. Things have unraveled quickly. And so with that being said, we're banking that the Feds, they think they know what's going to happen, because if things unravel quickly, they have to start cutting quickly, which is not good, because we don't want this up and down and down and up and all this stuff. It's not good. It's not good for real estate. It's not good for the economy. It's not good for the average person. And at the end of the day, the most people that win are the people that have the bucks, that know how to manipulate or play that game of up and down and win at it. They have the strategy, the money to take advantage of it, to take the hit or come out the other end, right? So it's very frustrating to sit here and talk to you guys week after week and not have any information. So anyways, I'm on a rant about being real here because it's so frustrating. It's like we just get some insight from the Fed, but I'm really nervous with this PC coming out this week, whether it's a little bit off or a little bit lower, because these guys are just all starting to change their minds. You know, months ago they were talking differently. Now they're starting saying different stuff, and it's just like really, what are we doing here? You know, there's a huge economy. There's consumers. There's people that want to buy a home. There's the real estate market. There's tons of the markets being affected by this stuff. And if they get it wrong, they could cause a recession, a job loss recession, and all this other stuff that comes with it. And so, anyways, it's just very, very frustrating. Anyways, that's it. That's what I gotta say about that. I'm ranting a little bit. I know you guys all agree. You're frustrated. It's super frustrating because we have a Fed that literally I feel like they just can't sit down and have a real conversation. Just be real and honest, because they're not allowed to. And there's political bullshit behind it. And it's not helping any of us in the real estate market, any home buyers, any people in commercial, business owners, the whole list goes on, right? There's so many things they focus on. There's so many things they don't focus on. Welcome back. And yes, it's every week. We get to go through all the exciting news out there. Oh, it's so fun, isn't it? Not really. But you know what's going on right now is all the house doomers and gloomers and crashers and predictors. You know, they are at it again, folks. And they're like, another year, it's going to crash. And this is it. This is the year. It wasn't 2019 or 2020 or 21, 22, 23. 24 is definitely a year for all you crashers and where the hell everything's going to blow up and go to hell in a handbasket. Just go on YouTube, they're all there. And that's how they get their views, and that's how they make their clicks. But kudos to all you house crashers. They keep getting it wrong. We do appreciate. People are still buying, people are still refinancing. The longer this goes, the more pent-up demand you're gonna have. The bigger tidal wave of buyers, and then commercial, you're just penting up the demand where there's gonna be so many more deals and refis and all that later on. So the longer this goes, the worse it's going to be. And what the Fed's going to do is they're going to basically pent up demand, and then they're going to get rates low, and they're going to have a surge of boom buyers and stuff and watch real estate prices go up and be like, good job, Feds, way to do it again. Way to hold it's like holding the horde dogs back and just let them go. And that's what's going to happen. So we'll have price increases and there we go. So that's what it is. That's what it is. What else are we going to do? There's nothing we can do. So people are still going to buy. People are still going to refi. Yes, rates are not 5% like we want them, but we got to wait. The data's not there. We can't keep making predictions. We just got to keep focusing on the data and hope that it gets better and hope that these people at the Feds use their brain a little bit more and start to realize that they can cut and it's going to be okay. And it's not going to resurge inflation and we're not going to cut and everybody's just going to have 3% rates because that's a little cut's not going to do diddly squat. It will help subconsciously. It will, but it's not going to just make things crazy. One of the things I want to talk about this week was TBD scenarios. Do you know what a TBD scenario is? It's to be determined. So if you're buying a home and you're going to put offers in, if you're here like in San Diego, it's super competitive. And how do we beat people out? You go get TBD. That means we take your file, we get it in a complete file like you're ready to go, and we pull your credit and we send it off to the lender. They underwrite the file, they come back with a decision, and we get all those items in. And then I have a full approval with everything cleared. But we need a house, we need appraisal, we need title, we need escrow, we need a purchase contract, we need insurance. That's about it if you find a house quickly. So you can go into that house, remove loan contingencies. If you're crazy, I'm just kidding, not crazy, but if you want to remove appraisal contingencies, you can do that too. But it's huge because you could do a 7-10 day close. We can knock it out. You're fully approved. You're fully confident. You can write that offer. We can tell the agents, the sellers, the whole thing that you are approved. You are ready to go. All we need is an appraisal, this and that, and we're done. Guys, it's almost like paying cash. Let's be honest. It is. So that is huge. If you've never done a TBD scenario, you should check it out. But if you have questions, let me know. Another big thing we're talking about is when you own a home and then you want to buy a new home. A lot of people don't know how that works. So let's say you own a home and you're not going to sell it. Let's say you don't need the money for any equity, or let's say you're going to use a line of credit, or let's say you did a cash out, doesn't matter. You want to keep it. So what we do is when you go buy the new home and you're going to rent this one out to help qualify, if you make enough money, you don't need to rent it out. You can leave it and you're going to sell it. If you don't make enough money and you're going to rent out long term, we need to get a lease, first month's deposit, and then we send that to the lender. And basically we can use 75% of that gross rent to help offset the payment, and that helps your DTI in the new purchase. If you have a first and if you have a second and you're going to pull that line of credit, we are going to act like you pulled it and hit you with that payment. So that's why we got to go get you pre-approved. That's why we got to run these scenarios to make sure you're good to go. You will need a lease, fully executed lease, and you will need the down payment, and usually that needs to be deposited in the bank. It's that simple. It's like magic, but that's how it works. If you are going to sell that home and you cannot get a lease agreement, we are going to hit you with that payment. So keep that in mind. That could be a problem. That's why there's bridge loans and things like that. If you need the money out, you are going to sell it, you can hit us up for that. There's other products to help you around that. What if you get laid off? That is a big question. Okay, Kenny, I want to buy a home. I just got laid off. Or maybe you want to refi. But let's just say you want to buy a home. You just got laid off and you don't know what to do. Well, that could be a couple things. If you get a new job, we can use a new job. But keep in mind, if you were laid off and you were W-2'd plus bonuses, plus commission, plus overtime, any of that stuff, your new job, if you don't have a history of bonuses, commission, and overtime, we can't use it. So we're going to use your base. But we can go, if you have a new job, we can use it. Let's say you're relocating. Let's say you live in Florida and you're going to be a nurse here in California. You want to go from the red state to the blue state. Just kidding. Just throwing a joke in there. Relax. And let's say you're like, Kenny, I want to buy a house before I get here, but I want to take a 2 months off because I don't want to start. So let's say you want to close in June 1st. We're going to close escrow, and let's just say May 30th, whatever. Picking a date, guys. We can take an offer letter. We can use that as long as you start 60 days from when we fund your loan. That first start date, that first, when you start. We can use your offer letter. Doesn't matter if you're executive moving, you got a new job moving. If it's going to start within 60 days of when we close your loan and fund, we can use it. So we'll need an offer letter. We'll have to spell out the terms. We wanted to make sure that you're a full-time employee. It should spell out your salary, your hourly rate, whatever that is. And it's pretty simple. They can call and verify. It's easy. We do them all the time. So that's a quick way if you want to get around that stuff. Should we sell or rent it? Look, guys, this is becoming a common question for the first-time home buyers. Should we sell it or should we rent it? I'm just going to give you my advice. I'm a guy that's built a real estate portfolio, managed a lot of properties, so I know cash flow, I know what's realistic, and let me give you my 2 cents here. Number one, you have a 2.5%, should you rent it? Look, there's a couple questions here. Do you need the money out of your house, number one, to buy another house? If that's the case, then you should probably sell it. If it's going to hurt you on the other one, that's off the table. If you don't need the money, you can go buy another one. Should you sell it? Look, let's say you have a house, it's 2.5%, the payment's, $1,500, you can rent it for $3,000. Guys, there's cash flow. It's like an annuity. If you want to be aggressive, take all the cash flow, dump the payments down, pay it off quickly. It's like an annuity, a 401k, you can give it to your kids. Of course, keep the house. But if you're going to break even on a house and say, oh, I'm going to play the equity game long-term and win, you're not going to win, because if you hold a house for 5 years and you break even, I will promise you, you will not break even. If a tenant does damage, if there's a leak, if their appliance goes out, if anything happens, you're paying for it. If you get a nightmare tenant and they don't pay rent, you're paying for it. If somebody basically, it takes you 2-3 months to rent it out, you just lost money. So if you're breaking even at the end of 5 years, you will not break even. So I would keep it. If you cash flow, if you need to sell it, take the money, do that. But look, be careful about saying I'm going to break even, because I've seen a lot of people, it ends up costing them tens of thousands of dollars to keep the home. And remember, if you're paying in money every month and say, well, I'm going to keep the home, when you go to sell it, that is money that took out of your pocket you're going to get back. So it is what it is. But I would say always try to keep the home. You can rent it out. Maybe if you build more equity over the future, you can trade up to a bigger property and get some cash flow. But look, owning real estate is great. Even owning one, I would try to pay it off as soon as possible. If you only have the one, it's like a 401k annuity, a retirement plan for you. And think about it. If you're in your 35, 40, you can pay it off in 15 years with that rate. My gosh, guys, you got a free and clear house. That's going to be great for your kids, your family, your future, passing that on. So that's what I got to say about that. Anyways, guys, that's it for the brief today. Short, sweet, to the point. Hope you guys have a great week. We'll see you next week. Thanks so much for watching. And remember, if I can help you with anything, please reach out. Talk to you guys soon.